However, the real situation shows some of the situation do not fit into some of the situations are not very appropriate for using the traditional method. For example, in some of the cases, in modern factories, some of the activities can be covered by many different plants. However, maybe only one plant produces the majority of products. And if this manufacturing overhead proportionate to those different plants evenly, then that do not reflect the real situation. Okay, the costing can be quite distorted. So in that situation, another technique could be considered. So in order to look into the distribution of the activities that are taking place in different centers. So activity-based costing, ABC, is a costing method that assign overhead and indirect cost to related products and services according to the proportions. The ABC system is based on activities. So depending how much they use the overheads, if a certain center takes a bigger proportion of the overhead due to the large amount of production they produce, then they should be allocated with a bigger portion of the overhead. Okay, so those activities could be production or could be unit of work or task with a specific goal. So ABC costing used to assign overhead to cost units using cause and effect allocation based on special term called cost driver. So an activity is a cost driver, such as purchasing order or machine setup. Okay, that can be a cost driver. The cost driver rate then can be calculated, which is the cost activity divided by cost driver. This cost driver rate could be used to identify indirect cost related to a particular activity. So that's the basic principle of ABC. We will illustrate a little bit. So for example, here is an example showing the activities, the cost pool, and cost driver, the relationship of those different terms. Okay, so if activities needed to be identified and their proportion amount needed to be identified, this can be used by looking into, for example, the materials different centers purchased, or the machines in different center they set up, or how long those machines are running as well. So these are some of the clues that can determine how much a particular center would take the certain proportion of the overhead. Then use these activities, cost drivers could be identified. For example, setting up machines, the machine setups will be the cost driver. So for example, center A would have 2,000 setups, and center B would have 5 setups. Then it's very likely that center A would take a bigger proportion of that overhead. So the amount of setups would determine how much one center would take the proportion of the total overheads. Another example would be, for example, running machines. Running machines in different centers might not be the same. So running machines can indicate the levels of activities. So machine hours would be the cost driver. Here are just some examples we will explain in the exercises. Example here, you can see here is a relationship comparison between ABC costing with other types of costing. So if overhead incurs and then it's being taken by the entire plant, entire factory, then it would look like the first pie. Okay, there's no distribution here. And if it's a departmental allocated, then different departments might have different types of proportion of this pie. So that would be the second one. However, for ABC based costing, so basically cost pool for each activity depending on cost drivers, then the pie would look like this. Different departments would share the a certain amount of overheads depending on the cost drivers. So such as the machine setup or running machine or machine running hour and so on. So another example, just to illustrate, in the real life, many of the business factories are shifting their costing method to ABC method in many of the modern manufacturers. There was a study conducted by a group of international banks, consultancy firms, etc., and found that in those banks, indirect cost overheads could represent as much as 85% of the total cost. Okay, so overheads take a really big proportion, particularly for some of the service industry sectors. However, while direct costs were generally under tight management control, overheads were not. So overheads could happen because of certain activities occur, and the overhead which include, for example, IT development, risk control, auditing, marketing, administration, etc., were often not allocated properly between operation divisions, or were allocated in a very arbitrary way. So overheads is a very big proportion, but showing here is very hard, very difficult to be allocated, and very difficult to be allocated very correctly. So that shows ABC, if it can be identified and used correctly, can be quite beneficial in precisely calculate the costing and support decision making. To put it simple, overheads using ABC has a formula actually. The formula for activity-based costing is the cost per total divided by cost driver, which yields the cost driver rate. So it would be cost per total and divided by cost driver. Okay, so total overhead in total machine setup, for example, in a plant, and the machine setting up a proportion for that center would produce the cost driver rate. The cost driver rate then can be used to do the overhead and direct costs related to particular costing. Just is quite a long example, so we just use some other examples after this. So ABC work in this particular sequence, for example, identifying indirect activities and group the cost into cost pool. For each cost pool, identify the major activity driving the cost, which is called cost driver, and then use cost driver to develop a cost driver rate. So for example, cost drivers could include machine setup, maintenance requests, consumer power, purchasing order, and so on. So that means the outcome of this tracing exercise is to provide a very realistic and more finely measured overhead proportions into different cost pool. And to implement a ABC system, managers need to carefully examine the business operations. They need to identify various supporting activities clearly. So if it's like what we mentioned in the bank, then they need to identify those supporting activities that not directly connect to the production or services. Using this couple of steps, basically, and identify the cost driver. The cost driver basically is the factor that can cause change in the cost. And identify the cost driver is very vital in making sure that ABC could be used successfully and would impact the consequent calculations. So these are the steps. Okay, just to summarize them here. About 6 steps. Identify all the activities required to create the product and divide the activity into cost pools. And cost pools would include all the individual costs relating to an activity and then calculate the total overhead of each cost pool and assign each cost pool activity a cost driver. To calculate the cost driver rate, we can go back to divide the total overhead of each cost pool by the total cost driver to get the cost driver rate, and then multiply the cost driver rate by the number of cost driver. So that's the procedure of ABC calculation. So using those 6 steps, we can take a look at this first example. So I just explain this example. So for example, a factory has set up 5,000 machines with an overhead of 11,000 pounds. Then the overhead would be 11,000 pounds. And because this 5,000 machine setting up is the only supporting activities, then it will impact the overall overhead. It will be the overhead total amount coming from this 5,000 machines setting up. So the cost driver is only one, is the 5,000 machine setting up. So cost driver is 5,000. And with overhead and the cost driver, we can calculate the cost driver rate, which is the next step. So basically 11,000 divided by 5,000, and the cost driver rate is 2.2. Okay, so that's the third step. We got the rate, which is 2.2. And the conditions 300 of these new machines are for new products. You want to put this into the working out of the overhead allocation and predict if it will be profitable or not. So for this new product, because it has only 300 machine, so from the total of 5,000 machine, then using the cost driver rate, which is the overhead cost per machine, then you can calculate the 300 machine overhead proportion. Overhead for this new product which uses 300 machines would be 300 times the overhead rate equals 660. So that's the overhead the new production would take from the total overhead. And from this example, we can see the cost pool, which is the machine setting up. Machine setting up is the cost pool. And cost driver is the setup number, which is 5,000. And cost driver rate. So the three important topic are all here. So one is pool, and one is cost driver, one is cost driver rate. And with cost driver rate, we can allocate the proportion of the overhead to the specific cost generating place. So that's okay. We move to the next. Here I have got another example. So this is activity-based costing as well. So for this, the cost pool would be machine checks and inspections. So that's the cost pool. And that would cost about 20,000 K US dollar. And with that cost pool, there are some activities. And these activities would generate costs, would make a cost change. So these are cost driver. So the pool is here, the driver is here. Okay, for 20,000 K checks and inspections, 200 would be conducted. The activity would be conducted. Okay, so number is 200, which is the cost driver. So we want, if for this, we can calculate the cost driver rate. So for overhead 20,000 K with 200 cost drivers, then we can get cost rate, which is $100 per activity that is taken place. So in this case is the collaboration adjustments. So each collaboration adjustment activity would cost $100 overhead. So that would be the overhead rates, $100 per activity. And then with this rate can go into different locations. So in this case, it's one activity, one cost driver. However, there are a few different sectors, different divisions in the factory. So some are using quite a lot of these activities, conducting a lot of these activities. For example, a toy making factory. Okay, so making different types of toys. So for example, for yo-yo, this is one production. It only uses 15 adjustments. So this is yo-yo. Then with 50 adjustments times 100 per unit, the activity-based cost driver rate, then this yo-yo production's proportion of overhead can be obtained, okay, which is 50 times 100 equals 5,000. And there is another section producing hula hoop. Hula hoop beneath yo-yo does not take any adjustments. So there's no activities taking place in this section. Then the total overhead proportion for this section would be 0. So this can be quite realistic. The distribution of the overheads can really reflect what is really happening in the factory. So this is another example showing the relationship between cost pool, cost driver rate, and how the rate can be applied to find out the proportion of the overheads that's being taken by different sections of production. There is another example. This one is a company that has 5,000 per year electricity bill overhead. The number of labor hours has a direct impact on the electricity bill. So if some plant has a lot of labor hours, then they will use more electricity and vice versa. So for the year being in the consideration, there were 2,500 labor hours worked in total. In this case, this can be considered the cost driver. The 2500 unit can be considered the cost driver. And then the 50,000 per year electricity bill could be the cost pool. And with this, we can get the cost driver rate, 20 pounds, 20 US dollar. So for this company using electricity, if the company use electricity to 10 hours to make XYZ, to make a product, then the overhead cost for making that product will be 20 times 10. So the cost driver rate is very useful because it can be used to identify the total cost in different centers and also the total production cost. Therefore, help to determine the price for the product. So this cost driver concept is presented here again, which is connected to the cost pool identified. And it's a reflection of if cost changes could happen due to the changes in the cost drivers. And just to give you an overview again of cost pools and cost drivers. So cost pools, like we mentioned, electricity consumption, production setup, machine running hours. These are all activities. So the illustration here, cost pool, okay, some of the activities are happening in the factory, in the supporting activities normally, such as these, okay, production setup, these are supporting activities, or inspection or quality control. These are supporting, not direct production related. In service industry, there are auditing, administrating, marketing, these all supporting activities, and they can be an activity and hence be considered as a cost pool. And using these activities, cost drivers could be identified connecting to those activities. So whatever the units an activity would take, that can be considered as the cost driver. So for production setup, the number of setup will be the cost driver. Even for machine setup, number of machines can be the cost driver. If it's receiving goods, in this case, number of delivers will be the cost driver. Hello, student. Hello, students. Have you finished the quiz? Hello, students. Just finish this quiz and have a break, and come back 10:20 or 10:30. Okay, students. 10:25.
Okay, teacher.
Yeah. See you later, students.